Yes, great, fantastic. All right, very quickly. Access this webinar for educational and informational purposes. Consult licensed broker, registered investment advisor before placing any trade those securities in order to discuss and track and monitor virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Need to fill stockboard.com, PSW notes, affiliates, and their respective offices, personnel, representative agents, or independent contractors in such capacities, licensed financial advisors, registered investment advisors, or registered broker deals. Nothing in today's webinar, website, or promotion material constitutes promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involves risk. Visit the OCC website, www.optionsclearing.com, to read characteristics, risks, standardized options. PSW provides education and training services and meant to teach the risks and potential rewards of trading options. We are not a service goes with trade. We are not implying guaranteeing any profit. As always, do not trade with money you cannot afford to lose. Past performance is not equal future results. Any results discussed in this webinar are not typical and only valid on the specific credit. By date, your results may vary. By accessing this webinar, you do agree to hold above harmless from any losses. You may encourage the results of information discussed in the media identified above. By accessing this webinar, you agree to be placed on a mailing list. Any CR and these other rest assured we take your privacy very seriously. We will not distribute or sell your information to anyone. There. Okay. Now, moving on. We don't need this one. Oh, I do need a tab, though. Let's see if we can follow the Apple thingy, because that's going on right now. Apple event live blog. That sounds good. Live blog. We can't watch it unless we have an Apple, which this does not. Not that we want to sit here and watch it anyway. How to watch it. So who do we want to watch it with? Gizmodo, they're good. Okay, we'll watch it with you guys. They're pretty good. Okay, this is it. No, maybe I gotta click on it. Live now. Does that mean this is it? Huh. All right, I take it didn't actually start yet. All right, we'll see what happens. Isn't Apple PST? Yeah, it's 10 o'clock for them, right? Ah, wrong screen. Yeah, 10 o'clock for them, 1 o'clock for us. Oh, here it goes. Oh, now suddenly people are talking. Oh, here he is. He just took a while to fill in the thingy. So which way is this going, down or up? It's going up, okay. So nothing, nothing, nothing. Here's, oh, that's funny. Tim Cook was with that, what's his face guy? I like his show. I don't know what his name is, but I like it. Oh, I bet he did it, though, in the, he probably did it not on the show. He probably did it just in the video. Tim Cook, Apple. Is he talking? Apple's having him is touring. Cadence is a good thing. Okay, oh, he is talking. All right, you know what? It's really not important unless they have a picture, my theory. I don't know if Gizmodo is so good, though. I'm not very happy with this, the way they're presenting it. Let me take a look at some of these that got a better one. You can come back to them, I guess. Apple Live event. I know I saw a really good one last time I watched. CNET, maybe CNET. That's kind of crappy presentation they got there. See, they're more focused on the slides, which is what we care about.
It's why so many developers first on iOS and many only on iOS.
Yeah. Oh.
It still holds true to this day. There's a lot of power.
That we don't need. Okay. So back to this. So he was in the carpool karaoke thing. He comes out. And 17 million paid subscribers to what, Apple Music, I guess. My kids love it. My kids cannot live without Apple Music. I like it too, actually. We play with it in the car. App Store, okay. App Store changed the world, 140 billion apps. Last page was 130 billion. Holy crap. That's incredible. Two times more global revenues, no kidding. Gaming, $500. Okay, I think this is a problem with Apple, frankly. I don't like the fact that there's 500,000 games in the App Store. I mean, somebody's got to filter this crap. It's ridiculous. It needs like somebody needs to invent like a Google for Apple, so you can actually find the stuff that's worth looking at. Anyway, all right, good. James Corden, that's his name. That's weird. It just doesn't seem right to me. But I guess it's. I'm sure you're right. Anyway, your show's great. Every time I see a show, it's just after Colbert, I accidentally see it. Sometimes I'm like, oh, it's pretty good, but not good enough to tape. Anywho, where are we? Let's look at the markets. Look at them this way for a minute, though. First, my hourly charts, all the indexes on an hourly basis. We've been deteriorating all day, which is good because we shorted all the indexes this morning. Even the Nikkei is going down, and the dollar is rising, but not too exciting. Nothing, nothing tremendous. But we got back over 95, which is what we expected to happen this morning. Let's see if I specifically say that in the morning here. Oh yeah, there you go. See, in anticipation of a dollar bounce back over the 95 mark, and that there's where shorting lines in the morning. So that's where we are at the moment. All lovely. So back to the indexes. The frickin' Russell. So if you want to short the laggards right now, let's take a look at that. Okay, everybody's down except the Russell, and that's just silly. So if that's true, I want to see if it could be some kind of a defect in the thing. But let's get the Russell. Let's put up the Russell. We certainly want to keep an eye on the dollar here, though. Oh, it is true. The Russell's up and everybody else is down. So now I'm going to switch to DX. Gasoline and oil isn't very interesting today because it's there's no report. We'll put the S&P there. And we'll put, let's go to NASDAQ. All right, no, I like it. So 1256, let's take a little short here and see what happens. It's not 1256, 12599. I could have gotten 1256. I'm not chasing it or anything. I just want to see what happens here. If it goes up to 1258, though, I'll do another one. I don't mind that. And what we're hoping to see is 1280 fail on the S&P again. These are probably weak bounces. Why this is not going down at all, I don't know. There's something weird going on in the Russell, but I'm not really worried about it. I mean, obviously, compared to the other indexes, the Russell likes a strong dollar because most of the Russell sales, most of the S&P sales and the Dow sales come from overseas. Most of the big cap companies, don't forget the NASDAQ doesn't even, after you get to the top 20 companies, the NASDAQ doesn't matter. The companies below the top 20 don't even affect the NASDAQ at all. So it's all about whether anything is good for Apple or Microsoft and so on and so forth. And those are big Fortune 500 companies too, where most of their sales, more than half of their sales, are overseas. So a weak dollar is actually good for them. They like a weak dollar, just like a Japanese company that exports a lot likes a weak yen. But the Russell companies, 70 to 80% of their sales are domestic. That means they don't like a weak dollar. They like a strong dollar. So the discrepancy that we have here is probably, and it's only such a tiny move in the dollar, it doesn't matter. But basically, if the dollar is strong, the Russell might be lagging a little bit coming down because they like to see a strong dollar. And so people who are there are people who are specifically making that bet. Yes, this is important to think about. When you're making these bets, there's always somebody playing a certain pair or a certain trade. So when I'm saying, okay, so maybe the Russell means that because some people are playing the Russell strictly based on the dollar. That's all they do all day long is they watch the dollar, they watch the Russell, and when the dollar goes down, they bet the Russell goes down. When the dollar goes up, they bet the Russell goes up, and they see that it's a leading indicator. And I mean some people, I'm talking about guys with like billion-dollar funds do this like all day long. And they'll move money in and out of the Russell in pretty large quantities with this strategy, okay? Then there's somebody else who's probably playing the exact opposite strategy somewhere too. But it's a factor. And so whenever you have these little logical pairs trades, it factors into the overall movement. It won't override a huge downturn, but it will sometimes make a little bit of a difference. And in a drifty kind of day like this, where we're kind of going down, but we're drifting, a little nudge one way or the other can make it move. So, my working theory here is that the dollar will get stronger, not weaker. Okay, people are betting it's topping right now, and they're jumping back into these indexes. I'm betting that it's actually going to go up from 95. That means I think we're going to get rejected here, and this is from, see this line here? This is the line you want to count. So 2186 to 2176 is 10 points. And if it's 10 points, then it's a 2-point bounce to 78 and 80. So there's your strong bounce line. Okay, we're over the strong bounce line, but only one over. Okay, so we'll see what happens. Okay, if it goes past this pink line though, then my premise is shot. Okay, my shorting premise is not looking good if we go over that pink line. But if we get rejected at the pink line, come back under 180, that's still a failure at the strong bounce, and we'll look to see this getting retested and hopefully failing. I mean, hopefully for shorting anyway. So that's the premise of the trade. There's no strong fundamental premise. I didn't read the news and see something I think other people are missing. We do have that beige book coming out, though, so I kind of like having a little bit of a short bet just in case, because I think there's two possibilities, especially on the Russell. Either the Fed says the U.S. market is weak, which is bad for the Russell, and they're going to leave rates low, which is good for everybody, but not as good for the Russell because they're not the gigantic companies that get all the free money. All right, so if the economy in the U.S. is weak, it's not particularly good for Russell kind of stocks. If the economy in the U.S. is good, then the Fed's going to raise rates more likely, and the dollar will get a little bit stronger, which is kind of good for the Russell, but the rest of the market won't like it. And as I said, the rest of the market will drag the Russell down with it if it goes down. So the beige book has to hit this sort of like Goldilocks thing where the economy is getting, well, it's the same Goldilocks thing it's been in for ages though. The economy is getting stronger, but isn't that strong, and we'd like to see it better, but maybe we'll raise rates. We don't know. We're going to wait and see. That's, been the statement the Fed's made over and over again. So that's kind of what the traders are hoping will happen today. But I just think that there's certainly more downside possibility than upside here, so it's a good percentage bet as far as just like putting a little bet down. Nothing I feel very strongly about though, for sure. I'll see how the other charts are looking. See if anything sticks out. Natural gas very weak. Oh, natural gas is a nice long down here. And again, it could get weaker. We've had a worse thing in natural gas. Energy. So always, before you make a bet, you always want to look at it from a pessimistic standpoint and say, well, how bad could this get? And you say, oh, that looks pretty good. On the hourly chart, we haven't really been below this level. But you know what? I remember being below this level because I made the bet before this happened. So we go to the daily view, and you see, ew, we're actually quite a bit lower. Oh, here it was. This is where I made the bet, though, right? See, before the hourly view starts here, and it looks great, right? But the fact is, I felt this. I made the bet down here, 270. I thought it was going to hold because it held last time. It didn't hold, and I had that really ugly period where it went down, but then we held on to it, and it fixed itself. But so now you got to kind of, you really got to, if I'm going to get brave, I'm going to get brave for more like 260, not a 268. It's tempting. I want to do it, but that's my old line, and it failed last time, so I have to be realistic about it. All right? Not looking good. 81.25. Oh, see, I don't see, if he goes over 18.5, that's going to be the end of this trade, I think. Then we should get out of the short. And see where, if we let it run up at that point. Where are we? The dollar's over here, hanging at 95. Oil's over there at 45. Not interesting to play at all. Gasoline, not interesting to play at all. Natural gas, tempting but no good. Nikkei, not interesting at that level. Gold, pulled back a little bit but not worth it. Silver below 20. Ugh. Okay, silver I think is consolidating for a nice move up in the near future from 20. But again, nothing I'd really want to play. All right, so that's where we are on the indexes at the moment. Well, how is our bond market looking? Bonds. No, not exciting. Oh, how's Apple doing, I wonder? See if anybody actually cares. What did I do wrong? Oh, no. Charts. Here we go. Dollar, gasoline, Nikkei, print. Wow, need more charts. Apple, no, hanging at 107. I mean, it's better than what people were thinking. They thought they were going to be disappointed. See if there's any questions first. Okay. And of course, Apple's going to affect NASDAQ, by the way. Where is good support on Apple to go long? 218.85 calls. I only have 10 Apple 2018 calls. I'd like to leg into another set. What do you think of Amazon? We talk about that all the time. Okay, Apple down 8 cents. They're not very relevant in this kind of size, right? What were we doing? Oh, blogging, right, the live blog. Hang on. Whoa, that's a lot of words. All right. I don't know how this looks on your screens, actually. Saw that. Super Mario, really? Who cares? Oh, God, look how much time they're spending on Super Mario. You know they got nothing going on if they got Super Mario out there. Look at this. Oh, my God. I would be so annoyed if they're spending this much of my time on Super Mario. Oh, geez, still? You got to be kidding me. We'll reveal price of the game later. Who cares? Still. God. Apple's 40th birthday is earlier. Yeah, it's true. It's Apple's 40th year, and they can't come out with something groundbreaking. Connect Education, 114 schools, 50,000 students. That's not very good. It's barely going anywhere. Everyone can code. I like that. That's a great project. Really? That's a fantastic project. So this is what? We're so excited to move and put this in the curriculum. So, these are all the schools that are participating so far. Okay, I approve. That's good stuff. Real-time collaboration. This doesn't affect me. Good thing, though. Every person colored bubble. Oh, God. Oh. Okay, I guess that's good for some people. All right, fantastic. So nothing too exciting yet. Let's see. So where's support on Apple? Let's take a look at Apple. Oh, look, there it is. All right, so where's support on Apple? Well, clearly support's going to be the 200-day moving average. Now, when Apple was above the 200-day moving average, which was for a long time here, it stayed above really, really well, okay? When it went below, though, it stayed below really, really well. So this is, you don't have enough, we haven't tested the 200-day moving average, but you have to assume that 100 technically is support. Now, fundamentally, 100 is support. I think 100 is a really fantastic price for Apple. When you start getting down to like $85, it's ridiculously underpriced. Apple is currently, is this thing right? $600 billion. So if you take 20% off that, that's like $120 billion. You're down to like $450 billion. And they've got they got $200 billion in cash. So then you're paying $250 billion for Apple at that point, which is roughly $50 a share net of cash. So it's just, it gets to be ridiculous when they're earning $10 a share easily. All right, so so anytime you're under 100, it's kind of it's a really good deal. But when you're talking about knocking it down to like, and again, net of cash 50, that's just crazy. Okay, so that's where you start getting to like, why would you not own it? So then if you want to translate that into the stock, into doing a short put or something like that to establish a position, So you go to 2018, they don't have 19s yet, but they will soon. Now let's see, the 90 puts are $5.70, $6. So $6 to the 90 puts. Now you say, how much more can I get for the 95? So you only get $7.50 for the 95 puts. I don't think I'd take that. I think I feel better about having 6 for the 90 because that's a ridiculous price. Even more ridiculous is $4.50 for the 85. So to me, this is free money because I absolutely, for sure, want to buy Apple for 85. So the fact that you're paying me $4.50 to make that promise is free money. Okay, so in other words, okay, a guy's got a brand new Tesla, right? Tesla's like a $90,000 car. So the guy says to you, would you buy this Tesla? So Apple's $100. That's a good example. So the guy says, would you buy the Tesla for me for like $65,000 if I wanted to sell it to you? And you're like, well, sure, yeah, definitely. I don't want it for $90,000, but I would definitely buy it for $65,000. Okay, so that makes sense, right? You say, oh yeah, for sure I'd buy it for $65,000. The guy's like, okay, fine. I'll pay you, and this is like 5% of Apple's price. This is anyway. So I'll pay you 5%. So in a Tesla world, that would be $4,500, and I'll pay you $4,500 to promise to buy my Tesla for $65,000. And you're like, okay. So then the question is, what do you have? Do you have an obligation to buy a Tesla for $65,000, or do you have $4,500 in cash? And maybe you'll luck out and get a Tesla for $65,000. That's what I mean by free money, right? You want the Tesla, and anyway, assuming you can afford it, of course. And same thing goes with these stocks. You have to actually be able to afford them and want them, not pretend you want them. But if you actually want to buy Apple stock for net, not net, for 85, if you actually want to buy Apple stock for $90, and you'd be happy to own it, and the net would be 84. Yeah, the net would be $84 on this. So if you would be thrilled to have stock for net 84, then essentially the guy's giving you $6 for free. And then you take that $6 and do whatever you want with it. Well, that brings your net up to 90, of course, if you spend it. But the bottom line is it's free money. Okay, just like the guy getting the Tesla money, I'm promising to buy it for $65,000. He's giving me $4,500. I'll go spend the $4,500. I don't care. Well, I'm still, assuming I buy things I want and don't just squander the money, I'm still getting my money's worth. I spent the $4,500 elsewhere, and then it comes back in the Tesla. All right, so that's the logic on Apple. I would go with the 90s because 90 is a price I certainly wouldn't mind paying. You're really netting out 84, but then you can then you can take the $6 you get here, and you can buy. It's at 107, so you can buy like the 95. Nah, buy the 100. You can buy the 100s for 16 or 15.75, and you can sell the 130s. Yeah, you can sell the 130s for 4. So 15.75. So it's 11.75 net. Less the $6 is 5.75, and that means you're in the 100-130 spread for 5.75. That's less money. Because you're netting 105.75. That means you're in the spread for less money than Apple costs now. You make every penny of the money up to $130. So your full payback would be $30 on your $5.75 invested cash. And your worst case scenario is if Apple drops $17, you'll have to buy it for $90. You're just promising in advance if Apple drops 15%, you'll buy it. End of story. So that's that trade setup. Now, I think the market's going to pull back still. It never does, but I keep thinking it will. So if the market does actually pull back, Apple will be cheaper. So would I buy the spread first, or would I sell the puts first? I would sell the puts. I wouldn't have a problem because, first of all, that 2019 is coming out, right? So how much are the 2017 $90 puts? That's not it. There, no. Where are they? Okay. The 2017 $90 puts are $1. So what puts are $6? Well, the 105 and the 110s are kind of $6. So let's say the 110s are 7, right? So you could roll the 110s to the 2018 90s for $1. That's $15 down for $1. So if I'm promising to buy Apple for $6, by the time the 2019s come out, I can roll these at least $10 lower for $1 to 80, maybe to 75. So now I'm only promising to buy Apple for $75. That's why, to me, the 90s, they're selling the 90s, they're no brainer. I know the 2019s will come out eventually, so I will be able to make that roll, even if Apple goes more in the money. In fact, again, we went back to this example, the January 100s. Well, let's say you did it with the 120s, right, which are in the money. The 120s are $14. Okay, so those are in the money by quite a bit, by $13. They have almost no premium here. They're $14. Where in 2019 can I roll those to? Well, look at this. The 110s are $14. So even if Apple drops significantly and your short puts it deeply in the money, you're still going to be able to roll them $10 lower. Now, not absolutely, but generally, you can see the examples of what's happening here, and it gives you an idea of what your escape is going to be down the road. And that's in 1 year. Now, think of the logic of this thing, because if every year you roll down $10, eventually it'll be zero. So think about it. It really is 10%, though, so it diminishes. But eventually it'll be zero or close to zero. So as long as Apple doesn't go bankrupt, you just roll it and roll it and roll it until you finally hit a price you can live with. And with Apple, what are the chances that Apple's going to go below 50? You're going to be 75 in a year. And then below that you'd be at 65, and then 50. It's something. So as long as you can hold out long enough, you can keep rolling it down. How are we doing? Watches. Number one smartwatch. Yeah, nobody. I still can't think of anybody. No, can't think of a single person I know who actually walks around using an Apple Watch. In fact, I'm curious if you know somebody. I don't need a story, but just if you know somebody who actively uses an Apple Watch, where you see them sitting there talking to it or doing appointments and things like that, I'm curious if anybody out there in the audience knows anybody like that. I just don't know what the market is for these things. Oh, this is all confusing. I don't like that. But that's not it's not my thing. I'm terrible at all this artsy crafty and creative stuff and everything else. So watch sales. Apple Watch. It's annoying because it keeps jumping. Comparing sales, international, the number 2 watch band between Rolex and Fossil. So people love the watch, blah, blah, blah. Here's the better watch. Oh, look, it has more faces. Wow, really? Wow, I really don't like this. I'm not pleased with what I'm seeing here. This is a lot of fluff. Little minor changes featuring programs and things like that. So what? It does stuff. It's supposed to do stuff. This is not. They should be innovating in a much stronger way. I can't believe they don't have a better shape for the watch or something. Pokemon Go on the Apple Watch. Holy crap! All right. Well, now my kids will buy it though. Look, a wild Snorfox. And see, this is sad. This is their presentation. They're showing you like inside the Pokemon game. That means they got nothing. I'm not happy about this. Swimming. Look, it's waterproof. Okay, great. Okay, waterproof is good, but again, I don't know anybody who actually uses the damn thing. All right. Now, that doesn't mean I don't like Apple. I'm just saying that Apple, I don't like where they are at the moment. But as a company, it's still a fantastic company. I mean, somebody made a good point last week. I was reading an article on Apple, and they said, look, Apple is I forgot what company they used. It made sense of. They're like, Apple's like a car company. It's like they have a car, big deal. You don't expect Ford. You don't say to Ford, well, what have you got that's new? It's like, no, we made this tiny change in the F-150 this year. And every year you're going to buy 17 million cars. As America buys 17 million cars every year. They don't care what the mix of cars is or what the products of cars, and there's no super exciting thing you're going to come out with. A convertible. That was like, a convertible was exciting. Steel-belted radial tires were exciting. Disc lock brakes were exciting. But there's no major changes. It's a freaking car. If you look at a car, a guy from 1900 who has a car would look at a car today and say, oh, that's the car. There's no change. In 100 years, really, you have not done much to change a car. We tweaked it all over the place. It's way cooler. It works better. It does all these amazing things. Still a car, though. But with Apple, everybody expects like some incredible, new, completely different thing every year. But what's wrong with just making a damn car? So see what happens. Especially if they make it, well, as long as they can make it with this kind of profitability, which is where they are. What do I think of Amazon? Amazon way overpriced. We had a big conversation about this the other day. In fact, was it yesterday? Oh, well, it'd be nice if this was actually yesterday, but it's not. Home. Okay, so our chat room, let's see, I know we had it had to be yesterday because we didn't have a day before yesterday, did we? All right. I said to Albo, I said, look, I think Amazon is a lot like Yahoo in 1999, okay? You had everybody believe, all during 1997, 1998, 1999, while Yahoo was getting more and more and more expensive, up to 1,000 times earnings it was trading at. There would be people justifying its price and saying, well, it's a new paradigm, you don't understand, all they have to do is this and that, and they could turn all those people, all those eyeballs that they have are going to turn into dollar signs when they flip a switch. They just don't feel like it yet. They're busy. Everybody says they don't feel like making money. You know who felt like making money? Google felt like making money, and they made money. Okay, I've run many businesses in my time. I've consulted for hundreds of businesses. I've really never run into business people who didn't feel like making money. Okay? It's sort of what the point of the business is generally. I understand, in the startup phase and so on and so on, you're doing this and that, you're not worried about the money yet. But after 20 years in business, you should probably be worried about making some money. But everybody loves to say that about Amazon. Anytime they want to, they can make some money. So do it. Let's see it. And not a 5% drop to the bottom line. I mean, let's see some real numbers coming in. And it's just not there, though. All the money they made, out of like $3 billion they made, $2.5 billion came from their cloud services. Retail is a losing business. Oh, I'm sorry. I got that backwards. They had $2.5 billion out of $500 million in profits. Their net profit were $500 million. They made $2.5 billion on cloud services. So the net of their retail operation is a $2 billion loss. They're negative 2% margins right now running retail. Can they fix it? It's not that hard to fix it. If you could easily pop 2% into retail, then Walmart would have another $100 billion. You can't. All right, believe me, Walmart's trying, okay? They're doing everything you can to get the most money you can out of retail, including lobbying to keep wages down and so on and so forth. Walmart is doing everything you can do in retail to keep prices as low as possible. Amazon does not have some secret that Walmart has not discovered. Okay, and no, online, we'll talk about that after too. But anyway, so here's Yahoo. So they go public at $1 billion, or just under $1 billion, 96. By 1998, they're 40 times where they started. 40 times. And then by 2000, they went up to 125 times where they started. They were making no money. Just like Amazon, they were making no money, yet they had an incredibly high valuation. And this is 12 years ago. They turned down Google. Of course they turned down Google. They turned down 1,000 guys a day came to them with a business plan, and they turned them down. Okay, it wasn't like they had a meeting with the top level of Yahoo and they looked at it closely and said no Google. It's like it was just another search engine telling people they could optimize this or that. It's not the biggest deal. They acquired Broadcast, which was stupid. They acquired GeoCities. Here's their peak valuation was $125 billion, which is, at the time was real money. Now we're like, oh, everybody's $125 billion. Back then that was considered big money. And Google wants $1 billion. This is when it got bad. Google came to them and asked for $1 billion. Yahoo took too long, and by the time they agreed, Google wanted $3 billion because a bunch of people who Google went to said, sure, we'd love it for $1 billion. Google went to like 10 different people and said, would you give us $1 billion? About 9 of them, but not Yahoo, said yes to $1 billion. So Google goes, let's see. I guess we should ask for more. And then it went to $3 billion, and by the time people came back with an answer on $3 billion, Google was like, no, you know what, we're going to not bother. Yahoo did $1 billion. Facebook, this is, funny, after losing Google in 2002, about, a couple of years later, Facebook comes along, and they lose that over an underbid. They're ridiculous. They're funny. But here, so they finally invested $1 billion in Alibaba, which was their big winner. Right? That one worked out. They also have Yahoo Japan. Doesn't talk about that, but at some point they developed Yahoo Japan. Then they turned down Microsoft, which was sadly stupid. Barely scratched back from that, and now they're just, selling off the little bits and pieces that they have. But that's Yahoo. But anyway, so the point was, look, here's when people were talking about Yahoo in 97, 98. It was going crazy. I told people it was crazy at $40 billion. Okay, I was wrong. Went to $125 billion. But you know what? 2 years after that, it was $10 billion. So I was right, except for this. And that's the problem being a value investor, though. I look at what something's actually worth. I can't control what happens in between. People can go crazy, but it doesn't change the actual value of something. So we talked about that, and then we talked about a whole bunch of other stuff. Oh, yeah, then we talked about whether Walmart is going to beat, whether Amazon can beat Walmart. And I said that's just not realistic because, Amazon has this tiny amount of retail sales going up and up and up, right? Walmart has $500 billion worth of retail sales. They're a developed company, but even so, here's Walmart's actual sales. They can't grow unless the economy grows. How can they grow faster than the economy when basically, I think retail sales are $3.5 trillion or something like that. They're about 10% of all retail sales in the United States. So they're really not going to grow much unless all retail sales grow. But here's the interesting thing. Walmart's online sales, if you break that out, they should be scaring the crap out of Amazon because they went from 10 to 12.5 to 15. This is 20% growth in 2 consecutive years. Okay, so 15 goes to 18. 18 goes to 21. And 21 to 25. At 25, they're getting catching up to Amazon, but Walmart says they're going to be at 25 almost in a year next year. So they think they're going to extend this, and they think they'll be at 30 to 40 in 2018, which is half of Amazon now. All right. So now, what you should be worried about, Walmart's not worried about their retail share being lost because they've got 10% of $4 trillion in retail sales. Amazon has 2% of $4 trillion in sales. So Walmart's not particularly worried about losing to Amazon, even if Amazon doubles to $200 billion, which doesn't seem too likely the way they're going. But even if they double to $200 billion, the amount of Walmart, the effect on Walmart would be 2%. No, I'm sorry, not even 2%, 1%. In other words, if Walmart has 10% and Amazon takes a 10% share of the whole pie, then Walmart will lose probably about 1%. They're not particularly losing their business to Amazon. That's silly. Okay, so the fluctuation for Walmart is going to be $4 billion out of $473 billion. They're not even going to care. Meanwhile, Walmart, though, is aggressively getting into online, and Amazon dominates the online space. Amazon is half of all online sales in the world. And Alibaba's the other half. Everybody else doesn't matter. So Amazon is half of all the online sales. So if Walmart takes 10% of that, that's 5% of Amazon's business disappears. So it's worse going the other way. It's much worse if Walmart comes into Amazon space than if Amazon goes into Walmart space. And here's Amazon's annual revenue. So it looks impressive, but it's the same 20% Walmart's getting, 7.4, and 20% of that of 74 is 89 exactly. 89, 20% of that gets you to 107. They're growing at 20%. They're not growing faster than Walmart. They're growing. This is how fast online sales are growing. Walmart hasn't made a big push into online yet. And then this is the funniest thing. I love this, because when you have people talk about Amazon, this is how much money Amazon has made in 20 years. $2 billion. This is how much profit Walmart makes in 1 year. $16 billion. Okay? So in 20 years, it would be, up, higher, 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 higher. Okay, and then all the way back down here for Amazon. It's not a threat. It's not even a potential threat to Walmart. They're not even in the same game. Other than the fact they both sell stuff. Okay? Amazon, the reason Amazon is able to succeed is because they are a flea on the ass of Walmart. They're not even an irritation. They're not even noticed yet as far as it goes. They're maybe just being noticed at this point with $100 billion in sales. Walmart, though, on the other hand, is an 800-pound gorilla, and if they step into Amazon space, which they are in fact doing in a big way, they just bought a $3 billion company to move forward in that space. That's a very, very bad thing for Amazon. All right, and again, I cannot stress enough that Amazon does not make any money at all in retail. Walmart, on the other hand, drops about 3% to the bottom line. But that's a million miles away from where Amazon is. So Amazon is not even the beginning of a threat to Walmart, but Walmart is an incredibly huge danger to Amazon. Oh, hey, we have a trade out, don't we? What's going on here? Forgot about it. It's flat. All right, so what's going on? Dollar's still where it belongs, but the S&P is up, so you should get out of this trade. It's no good. All right, let's get out. Gone. Okay, why did I get out? Because this is over the line. We said if it was under the line, okay? These guys are going up. The dollar's staying flat. It's not over 95. So none of the things you're looking for are happening. So there's no reason to stay in that trade. So a big zero on the thing for that one. All right. So what do I think of Amazon? What do I think of Amazon? The stock's hitting new highs. I think it's all silly, but you know what it is? Where are you going to put your money? I was saying today, Henkel, the knife people, and Sanofi in Germany both raised, one raised $500 million, one raised $1 billion, selling bonds at negative interest rates. Okay, think about that. Because when you buy a bond from a company, you have to insure the bond, or you should insure the bond against a loss. You could lose the money. You might, and it's not just. I mean, this is insane because it's not just that you're not getting any interest, or you're actually paying them money. You're paying them you're paying negative interest. You're paying them a company to hold your money because the company takes less of your money than the government does when they hold it. You realize money is getting like a hot potato, like nobody wants it? That's essentially what this is. That's how that is. It's like, oh my God, my boss paid me money. I've got to get rid of it. Here, who will take my money? Nobody will take your money. The government won't take your money. The bank won't take your money unless you want to pay them to do it. Okay? And now even a corporation says, no, you know what? No thanks. We don't want your money. If you want to give it to us, we'll charge you. That's how bad it is to have money right now. So, given that, what are you going to do? The only thing you can do with your money is buy stocks. You can't buy corporate bonds if they're paying negative rates. You have to put your money into stocks or commodities, essentially. And the scary thing is that's true, and yet commodities are still in the crapper. And so we have this gigantic, ridiculous stock bubble where money is just going into stocks regardless of their actual value. And it just keeps coming in, and we're in a weird place right now. And I even said this morning, I'm like, look, at some point we're going to have to just switch off our brain and capitulate on this thing and start buying again, because we can't. If this is going to last another year, I don't want to sit it out. I thought it was only going to last the summer. It's still going on. It's not stopping. It's crazy. Is it 2 yet? Not close. Apple down 8 cents. Anybody experiencing issues? Sound. I hope that's not continuing. Instead of legging into another set of 85, I should leg into 218, 100 calls. I don't like the hundreds because we're going to go to 100. We're probably going to go below 100. You're going to have a very ugly looking loss that you'll have to ride out to do that. All right. Plus, you'll get hit hard on margin doing that also. So think about it before you do something like that. If if you absolutely want to buy Apple and it doesn't bother you that you'll have a big negative, because think about what's going to happen. Apple. So the hundreds, all you're going to get is $9.35. I mean, it's not nothing, but instead of getting $6 for the 90s, you're going to get $9.35. So you're going to get $3.35 more, right? But you're going to have more margin. You have essentially $10 more margin than you have on the 90s, or maybe probably $5 more margin requirement. So you're getting a fairly low return on margin for your additional money. You'll also, if Apple goes, and it most likely will, if Apple goes down to like 95 or 90, okay, let's say it goes to 95, that's like $10 down from here, you'll be at the same price as the 110. So you'll be at $14, $15, $16, let's say. So you're starting out at $9.50, you go up to let's say you're down $6. You'll be down 66% on this position, and your margin requirement will increase substantially. All right. Now, again, if Apple's down at 95 and you're netting into the position for 90 or around 90, then who cares, right? As long as you absolutely want to buy Apple and it's not bothering you that it's at 95, and it shouldn't bother you if it's at 90 or 85 either. None of those things should bother you, but you will have a very large negative in your portfolio, and that will prevent you from buying other things and doing other things. So it depends on, your overall position and how much you really want to commit to this Apple position. All right, but if your intention is to absolutely buy Apple, and if you're not going to get Apple, you're going to be damned if you don't at least get $9 out of the deal or $10 out of the deal, then sure, that's when it's a good move. So if you have to pick one position for a new investor to make right now, oh, wow, that's a lot of pressure, Craig. Well, I mean, that's what the top trades are for, right? Coffee, Joe, J-O, there you go. I'm thinking, is that true, though? I'm thinking, like, okay, so we have our top trade, so let's look at that. And all Not all PSA. All right. Anybody who's in this webinar, except for the Seeking Alpha people, should be able to access top trades. You just click on it, okay? If you're a top trade member, obviously. If you're a basic member, if you're a premium member, even if you're a, I think even if you're a Trend Watcher member, you should be able to see top trades, I think. Anyway, definitely basic and premium members. Well, you just click on top trades and you get there. That's it. Here's your section. Joe was our last one. I love this trade, going long on coffee. This trade, it's net 1850. It's a $4,500 spread. You have 140% upside on that one. All right, and this one has an insane upside. I incorporated selling. I think we put we put this in the short-term portfolio. This is a $100 credit, or it was anyway at the time we did it. It's a $100 credit. And it's a $15,000 spread. So you're going to make $15,100 back on a $100 credit if all goes well. And all that really has to happen is Joe goes to 22, and GoGo stays above 10. That's it. So two things have to happen. You make all that money. What do we do before that? Frontier. We like FTR. Oh, and look at that. That's beautiful. So now it's popping. Very nice. Okay. Frontier is a little phone company that we like very much, and they pay a nice dividend. There's another good one. IMAX, underpriced. We like IMAX here for sure, near the $30 line. We have for one, but there's a couple. There's good old Apple. When was this date? Did we catch it? August 22nd. Nope, that wasn't. We're only flying around that area. This is where we like them. Now we have Kate, SunPower, and UNG. Let's see, Kate, SunPower, and UNG. Well, Kate went flying. Holy crap. Wow, did we nail Kate? Kate. Look at that. Holy crap. See, here's the good one. We sold the $15 puts. It was down here when we did it. We sold the $15 puts for $230. We bought the 15-20 bull call spread. It's already at 20. That's fantastic. SunPower, still cheap. UNG. Now this one's back getting to the lows. We were just talking today. We were debating whether or not I said this is when I took an entry too early here. When right around here is where I went long. In fact, this is it. This is August 11th, right? So we went long August 11th. And it unfortunately went against us at first, but then it came back nicely, went all the way up here. We got out of the trade here, and now it's back down. Now, as a value investor, I don't take this channel into account, but it does support the notion that maybe I'm not going to get my lower price anymore. We're not going to get 260 as an entry on natural gas. This might be as low as it gets because we're in a rising channel. So we'll have to consider that. All right. Anyway, so there's a couple to start, y'all. There's always something. I mean, and those are only our top trades. I mean, every week we've got like 20 of these things that we find. Trading halt on Exxon. Oh, that's probably, I don't know. It could be good, actually. It's weird. Okay. What's up with EZT? I don't know. Let's see. What? EPEN. Well, something good happened. Presenting at a conference. That's really... Wow, nothing. Rumors and innuendo, it seems. We have several in our voting group that are active users on the watch. Oh, okay, yeah. See, okay, so one guy so far. I'd argue Walmart customers are different breed than Amazon. Oh, yeah, they're different. Yes, Amazon caters to basically richer people. First of all, with Amazon, this is something I was thinking about this weekend because I stayed in New York City the other day because I was doing that interview. And I was in the hotel I took. I was in the Marriott right in Times Square. And I'm looking out there, and there's, I'm thinking like I could see 1 million people's apartments. I mean, literally, you can actually look out and see where 1 million people live in the middle of New York City. None of those people can get drone deliveries. Not only that, though, but the whole concept of delivering to people in New York City is a very difficult thing because it's hard to park. You can't just park a truck in front of somebody's house. And you can't just run to their front door. Sometimes you can leave them with a doorman, but a lot of times you can't. There's no, only rich buildings are doorman buildings. Most people live in a walk-up, and you can't just leave a package downstairs. So it's a whole big thing delivering it. And so UPS isn't like overcharging Amazon for deliveries, and Amazon isn't going to be able to just, boom, wipe out that thing by having drones or whatever. And half the people in the world, that was another point made on Tuesday, oh, there it is. See? Look at all these conversations we have. So interesting. So we talked about drone delivery. Half the people, 50%, half the people in the world live in cities. 4.2 billion people live in cities. There's only 7 billion people on the planet. I don't know why this thing thinks there are 8 billion people. Or I guess it's 7-point-something billion, but whatever. And that trend is increasing. More people, all the new people on the planet projected for the next bunch of years are going to be living in cities, not living in the suburbs. People aren't moving to the suburbs. The cities are growing, not the rest of the planet. So Amazon already can't deliver to half the population. They're not going to provide the kind of service that half the population wants. They're not going to save money doing city delivery. They can't beat UPS in their overall delivery schemes. It's a tough trick. Walmart shoppers are the suburban shoppers. That's the other thing, though. In the place where Amazon would want to get the people, where people have homes or have like at least normal places, those tend to be the Walmart shoppers. They live in a town where the big store is Walmart, and they go to Walmart and buy everything they need all at one place. Let's see what Exxon says, actually. Hopefully someone's buying them. Oh, yeah, they popped, too. Nice. Yeah, we got burned on them, but then we decided to hold on because we were hoping something good was happening, so we'll see. Wouldn't it be funny if the government's letting them go ahead with those trials? All right, so Bruce is the only person who knows somebody who actually uses a watch. Is that true? Out of all these people here? That's scary. Come on, please participate if you do. I'd like to know. Apple phone being, Apple phone being announced. Thank you. Forgot about that. So many things going on. And we got the Beige Book, right? Isn't the Beige Book out right now? What's more important? Charts. Nothing. No real reaction at all so far from the Beige Book. We'll look at that next. Oh, wow, busy day. Apple Watch. Oh, look at that. It looks like a watch. It looks like the same exact watch. Oh. Wow, really? Nike? It looks like a Fitbit. I mean, what's the difference? Oh, man. My daughter was into that Fitbit thing for a little while. Didn't she lost interest? iPhones. 1 billion iPhones. That's incredible. They're going to launch iOS 7. Again, these are paint jobs. This isn't product. Lyft. Wow, we have Lyft. iOS 10, you can manage your home from the control center. Ugh, really? Okay. Oh, and what's this? 100 device makers coming to the market this year. And they've got, it's all this homey stuff that you can adjust all your house things. HomeKit, yeah. You can buy all new stuff that doesn't work. Please, really? Ugh. There's already enough junk in my phone. Oh, that's kind of fun, though. I like that. All right. I'll learn how to do it. It's funny. All right, best iPhone ever. Dual camera to start, iPhone 7. The dual camera is a really smart idea. It takes 2 pictures at once, and it merges them. And each camera has like a certain different quality to it. You know, like one's really good at one thing, one's really good at another thing, and it blends them together. There's a little processor in it that blends the 2 pictures together to come out with one really good shot. It's really cool. Black shiny. Absolute utility videos. One phone is a dual camera and one is not. Oh dear. So it seems like they're only going to have the 2 cameras on the big phone. Damn it. I don't like the big phone. The home button has been redesigned. Haptic, re-engineering, force sensitive. So there is still a home button. Is that what they're saying? Water and dust resistant. What does that mean? Let's talk about the camera. No. Alright, well, we're not getting the full picture here, but apparently this guy feels that it's toilet safe, which I think is horrifying, because frankly, if my iPhone falls in the toilet, I want a new one anyway. I don't want it to work anymore. I just want to have a reason to go to the store and get a new one. Shit. So the regular sized iPhone is still going to have 1 camera. That's a shame. All right. Anyway, where were we? Lumber Liquidators. Yes, that's a good one. I like the Lumber Liquidators. What do you think about Infinity? I mean, I like it. We like CBI. That's a good infrastructure play. IFN, I'm not a strong feeling about that one. But CBI we just recommended for something. I don't know if it was top trade or not, but we certainly recommended it. Exxon Positive News. You know what that news is? Facebook is out. A couple of friends have watches. Okay, 2 people. We got 2 people who know somebody who likes watches. Wow, that's so sad, though. Okay. Yeah, there's a lot of talking about a camera, man. Look how complex that is. Wowee. I mean, it's cool and all that, but geez, is this what you really, the whole local tone mapping? I don't know. I guess people are into that stuff, but it's not why I buy a phone. My phone happens to be a camera. It's not why I buy the phone. What was I going to look at? The beige book. I knew there was something I wanted to look at. CNBC's talking about the Pokemon Go coming to the iWatch. Like, that's the big story. See, I said, that's the big story. No wonder Apple's not going anywhere. That's not supposed to rain. What time is it? No, it's too early. National economic activity continues to expand, modest pace. Modest, moderate pace. Kansas City, no change in activity. See, now that's tough when they say that, because no change in activity from what? Philadelphia, Richmond, Ottawa, still expanding. Activity slowed. So there's no growth. Kansas City, New York, Philadelphia, and Richmond all say nothing much is going on here. Everybody's modest and moderate at best. So everything modest. The key word is modest here. Consumer spending, little change. Auto sales declined, but still high. Yeah, that's what I kept saying. It's not a big deal. Tourism activity was flat. Sales and non-financial services gained momentum. Manufacturing activity rose slightly. Activity, but that pulled back already. Activity, oh, by the way, this is important. This was collected on or before August 29th. Commercial real estate expanded further. Oh, I see that a lot. I was walking around New York, like I said. Still way too many empty stores. You know, look, if you can't fill a store in the middle of Times Square, if you can't find a tenant in the middle of Times Square, there's something wrong with the economy. And, you know, if you go to a popular mall by your house and you see empty stores, you say something's really wrong here. There shouldn't be empty stores, not at a popular mall. You know, it's a real scary environment. It's barely functioning, a lot of stuff. Real estate market modest, pace of sales was constrained by shortages of available homes. I don't know if that's really true. There are homes, you know, a home shortage is when they were being bid up like crazy in 2006, 2005. That was a shortage. That was when people would buy a home and then 2 weeks later they'd sell the home they just bought for more money. That's when you have a shortage of homes. This is just, nobody wants the homes that are on the market, so the prices aren't going anywhere. Commercial real estate, the problem is that people aren't being realistic about the home prices. That's what's really wrong. The amount people are asking is not matching what people are willing to pay for. Therefore, you have a low amount of inventory on the market because the buyers aren't there. They're not coming around to buy things because the prices aren't right. And the prices aren't right because the taxes are crazy on the homes also. It's a part of the transaction. Commercial real estate activity. Demand for business consumer credit varied, but appeared to expand moderate again, stable quality. Labor market conditions are tight, moderate payroll growth. Now, labor is tight. Now, labor, we're running out of people. We're running out of people to fill jobs when we're trying to expand the jobs. That's when you start getting some real problems with corporations because you constrain them from growing because you don't have any more people to feed into the companies. You increase their cost of hiring. They have to spend more money to get themselves good people. And that's when you start putting the brakes on the expansion. We don't even have expansion, and we're putting the brakes on it. And that's because we don't educate our population well enough. That's one big problem in this country. Moderate payroll growth noted in general. Upward wage pressure increased further. And in moderate balance, more rapid gains reported for workers with specialized skill sets. Yes, of course. Prices remained slight overall. Price increases are slight overall. Retail sales, little change. Boston, modest gains. Boston, pickup in sales, increased traffic. Philadelphia reported decreased traffic. See, I mean, the two same-sized cities, Boston and Philadelphia, so they cancel each other out. Retail sales, you know, when you read two things that cancel each other out, just ignore them. Retail sales declined in Dallas and Kansas City. That's not good. Chicago, consumer spending slowed notably. It's horrible. Sales softened in Richmond. This is a horrible report. The contact from the district expect the usual, but they expect. See, I love it because it's always like, well, the actual data is very bad, but we expect in the future it'll be good. I hear it so often. It's sickening. It's like, for God's sake, get real about your expectations. Inventory is in line with expectations, higher than desired in Chicago. So Chicago's saying we have too much stuff. We can't even sell the stuff we have. We don't want any more stuff. That's not good for the manufacturers. Auto sales declined, but high. We talked about that already. Vehicle sales in Philadelphia, blah, blah, blah. Tourism, who cares? Non-financial picked up, blah, 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 blah. Freight volumes, freight volumes picked up in Philadelphia, Richmond, San Francisco, but declined in Cleveland. See, again, similar-sized cities, some picked up, some declined. Staffing businesses, moderate increase. Philadelphia, slower growth in staffing. Transportation firms. Manufacturing. All right, let's see if we can get a winner here. Manufacturing center was flat to slightly up. Chicago, moderate pace. Dallas, manufacturing is up modestly in Dallas, but contracts in San Francisco. Those cancel each other out. Several transportation equipment manufacturers plans to expand in St. Louis. Who cares? We plan to expand. Pharmaceutical in San Francisco said sales are strong. Weakness in oil and gas extraction continued. Chicago says demand for steel was steady. Declining imports because of the tariffs have helped domestic producers gain market share. But that's not, see, this is, okay, it's a thing, it helps a little, but it's such a small industry at this point in America, it's not a big deal. But the thing is, the only reason it's improving is because of something artificial that was done. We put tariffs on foreign steel so manufacturing can pick up in steel. It has nothing to do with demand. The demand for steel is steady, but the people who want the steel are turning to domestic manufacturers because the tariffs when they buy from overseas is too much. That's not a positive sign for the economy, but they fake it because older people, look at something like that and they say, oh, well, steel is doing well, everything must be doing well, therefore the economy is good. It's not the case at all, okay? It's particular to the steel sector because of the tariffs cause the steel sector to be busy, but the overall economic activity is the same. There's no positive sign to be read into that thing. Real estate moderate, banking and finance. Somebody just asked me this on an interview today. Business credit varied but grew at a moderate pace. San Francisco, strong demand for loans. Demand in dollars was soft. Oh, that's because of the energy, so you don't pay attention to that. Commercial industrial lending slowed. Philadelphia reported most loan categories grew at a faster pace than the previous report. Small to medium banks in New York, strong demand across loan categories in New York. According to Dallas and Kansas City, some oil and gas companies reported challenging obtaining credit. Okay, not surprising. Credit quality favorable. However, contacts in the Richmond district noted that credit quality deteriorated slightly. Not too worried. Bankers in St. Louis reported creditworthiness was unchanged, but declined somewhat for commercial. Atlanta noticed a drop in delinquencies. That's a good thing. San Francisco, in states with legal marijuana, reported increasing operational costs. They're already worried about the state of the marijuana industry. That's funny. All right, agriculture, mixed conditions. Employment and wages, moderate pace. Conditions labor market tight everywhere, pretty much. In Boston, unusually high number of openings. That's interesting. Oh, I mean, people are hiring. Okay. Richmond district turnover rates for entry level. Employment gains were modest in Cleveland. Philadelphia, increased part-time, longer work weeks, reduction in full-time hires. Many districts report trouble filling vacancies. Wage growth flat and strong. Wage pressures were modest. Wage pressures, highly skilled workers. That's why, obviously, if you're highly skilled, you're going to get some good money. Most evident in construction and real estate. Wage pressures were modest with contacts and pressure. Expectations of wage growth were modest. Overall price inflation, modest. Okay, completely unexciting, uninspiring report, which obviously did not move the market and probably won't move the market now. And we're just sort of hanging. All right, well, sad to say, nothing exciting going on there. How's Apple doing? Anything exciting in Apple? Where did we leave off with these guys? Cameras. We left off at the cameras. We take pictures of people. iPhone's going to be part of any professionals. The camera didn't just handle low light. Up to the professional photographer to say how, he would use his iPhone as a camera. That's amazing. All right. I got to tell you, though, kids today with the selfie thing, they're super into cameras. I mean, they're into phone cameras. None of them want a real camera. Jackie got a real camera. She lost interest really fast. The phone you have on you, they're constantly taking pictures. So this does matter to younger people for sure. The 7 Plus, 2 lenses. Well, I guess if you're really into that, but I just could not possibly. Although I had fun. We went out this weekend. I was taking some of those little moving pictures, the ones where you press the picture and it moves. Those are kind of cool, actually. Oh, come on. Really? This is all you're going to talk about? Yeah, Sophie, look at this. Look how much time is being spent on this crap. Okay, now they're going to talk about the Retina display. That brings us right up to speed. Retina high-def display. Wow, I'm disappointed. All right. Well, let's see how Apple stock is holding up at the moment. Apple, whoop, just flat. Everything's boring. I'm sorry. Wow, terrible day for this because everything's just blah. As Jim says, the tightest trading range, really crazy. Florida House members request emergency authorization to combat the thing with their technology. Holy crap! Oh, that's so interesting. I don't think you can just do that, though. I don't think Florida has the power to do that. It's such a unprecedented. It's an EPA thing, isn't it? See, Dennis says raw files in the iPhone is a big thing. I unfortunately don't know enough about photographies and pictures to determine that. Certainly, we'll take your word for it. 25% brighter. See, that matters to me. I like a nice display. Instagram stories. Oh, boy, they really are making an event out of it, but they bring all these guest speakers in because they don't have any content of their own. I'm not happy. I mean, professionals can really use it. But yeah, I mean, all right, well, I mean, if you think the lenses are good enough to use, to me it's like, I don't know. Maybe it's just the way I take pictures. I never think it looks anything like a professional photo. And I used to take, proper pictures with the real, it's funny, I used to like using nice cameras, but because I have a camera in my phone, I just never carry a camera anymore. Just because I have the camera in the phone, even though it's not as good, I still just feel like an idiot lugging a camera around when I have one in my phone. So I kind of just lost my interest in photography. Essentially, it caused me to lose my interest in photography. I used to really enjoy going on vacation, taking pictures. Now, I don't even take pictures because I'm always thinking like, well, all I have is a stupid phone. I'll take a couple of shots and then I'm done. I don't like try to do anything fancy. It's weird. It's a weird thing. If the phone didn't have a camera, I would probably still be carrying cameras around and taking nice photos. But just to me, it's just like, why would I bring a camera when my phone's got one in it? But then I never use the phone for that purpose. So I was kind of excited about the 2-lens thing, but I'm not going to get a plus. That's too big. Anywho, all right, so what's going on? Nothing, unfortunately. I'm sad to say this is not going to be exciting today because the beige book was a big blah. These guys are all drifting, although we're back to essentially where we were this morning. We're getting up to these highs again. The NASDAQ corrected a bit, but that's okay because the NASDAQ really ran away. And it looks like we're drifting up. The dollar failed 95, so that's encouraging people. Oil flat though, gasoline flat. It's up for the day, but it's flat now. Natural gas still hanging out 267. 2675 was where we picked it up last time, but it fell all the way to 260. That's a very expensive fall because it's $1,000 per penny. Is it 1,000 per penny? Well, no, the way I buy it is 1,000 per penny. It's 100 per penny. Sorry. That doesn't even tell you how much it is. That's weird. Okay, anyways, $100 per penny. I apologize. So it's still an expensive fall for a single contract. I usually buy 10 at a time. So you could lose $600-700 on a fall back to 260. 260 is where I start to have some real conviction on this thing. So if it does come down and leg down lower, and we have the natural gas report tomorrow, then I'm kind of interested. Now, there's no reason to expect any kind of big draw tomorrow in natural gas. And of course, you can do the UNG play. UNG. So probably some good prices here. UNG is currently $7.86. We certainly don't think it's going to go much lower, so you can sell these $7 puts for $1.10, and you can use that money to buy the, what would I buy? Yeah, I'd buy the 5s for $3.40, let's say. Yeah, probably $3.40, and I would sell the 10s for $1.05, and that's what, $2.35 minus $1.10 is $1.25. So you'd be in the 5-10 spread. So you buy the 5-10 spread, sell the sell the $7 puts, and that would be $1. What we say was $1.25. So it's about $1.25 or $1.35, and you've got $5 back if it hits 10, and you're already in the money $2.80. So that's the kind of spread I would set up there. And again, that's also because if gas goes lower and it goes below 7, it doesn't matter. I'll be very happy to own it long term at that price. Because you're talking about being below $2.50 long term. Why would you not want that? You can always just sell calls against that and get a nice return. Like, let's say you bought it for $7.86. Let's say you just happen to own it for $7.86. If you own it for $7.86 and you sell the $7 calls for $2, you're getting $2 back on 8, which is what, 25%. So if I own it for 7, in 18 months or 16 months, I get 25% of my money back. Then 16 months later, I get another 25% back. Soon it's free, and then I'm just collecting 25% for nothing. You know, that's my 6-year, 8-year plan to do that. So assign me, big deal. I'll take it. See, some things are just like no-brainers. Like, yeah, of course, I always want natural gas for $2.50. 10 years from now, I'm going to want natural gas for $2.50. Natural gas is important fuel. It heats my home. The only way I could lose is if natural gas is lower. And if natural gas is lower, then my home heating costs are lower. So I'm going to get the money back anyway. Some way or another, I'm going to win on this bet. No trades jumping out at me here. Sorry about that. Nothing good in the futures to play. Disney keeps drifting low. There's no floor on Disney. It's amazing how out of favor that stock is. And I like that stock, too. But, yeah, it just goes down and down and down. You know, and where's the floor? I mean, theoretically, you would think that 90 would be the floor. Somewhere between 85 and 90, it should bottom out, even technically. But, wow, it's just crazy. And it's way undervalued. It's a very good stock at that price. OOPTLT, any chance it will drift lower prior to September expiry? No. No, it's not happening. That's sadly not going to work out, I don't think. Because it doesn't matter what the Fed says or does. Well, I'm sorry, it is possible. When's the Fed meeting? Meeting schedule. Not 2:15. September 23rd. No, see, that's after expiration. So, you know, the only way to play TLT, you have to roll it to the next month and then hope that at this meeting they actually raise rates, which will send TLT flying down. That's about the best way that's going to work out. All right. Hey, how are these portfolios looking? Are these working? Portfolios. Take a quick look. I got to go, though, so it's 2:30 already. All right. This is the long-term portfolio. Holy crap. Well, one good thing about the markets going up is this stupid thing just keeps going up. 122%. We just reviewed this over the weekend. Where was it on Friday? That is crazy. $117. Look, it was 1089, And now it's 1111. So what's that? $22,000 since Friday, untouched. This thing gained $22,000 since Friday, and that's not nothing because our market value is only $208,000. Okay, so you like look on Friday. Blah, 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 blah. Here it is. Friday. See how it's 186, right? So it went from 186 to 208. So that's 1422. Yeah. Okay. So, well, obviously it's the same amount because we didn't touch it. Obviously the number's going to square up. So it's the same thing. It's $22,000. 10% of our invested market cap has been gained in 2 days. That is crazy. But don't forget, this is a very bullish portfolio. So now we'll look at the short-term portfolio and see how that's doing. Hopefully not down $22,000. No, 382. See, this is perfectly doing its job. So the short-term portfolio on Friday, which protects the long-term portfolio. There are no short positions in the long-term portfolio, or not major ones. The short-term portfolio is 483, and it is now 482. So yes, perfect. We did not lose money. We only lost $1,000 in the short-term portfolio, but we gained $22,000 in the long-term portfolio. So this is fabulous. All right, that's as good as it could possibly get right now. I mean, it's ridiculous. It's a completely ridiculous amount of money to make in a couple of days. The options opportunity portfolio. Now that's interesting. I don't know if we're too bullish or too. I think we're okay. 84.9. Okay, so that's pretty steady. I think we're kind of balanced there. 84.9, not you. Oh, damn. Okay, so the options opportunity portfolio lost a few $1,000s. All right, now I don't know where, but and it could be just, I mean, it's hard to say why, but something went against us, obviously. Not sure what, because Exxon went our way. Other things seem to be good. TLT, we know, is falling apart. Oh, and TLT, you know, we already moved to December. We moved to a December spread. The 140 puts we owned, and we sold the 133 puts. That's what we did with our September TLTs. So we already gave up on that position and rolled out. I forgot we did that. BHI, GoGo, IMAX, Kate, Dabu, Marvel, SunPower. Well, SunPower is always going down. SQQ, Taser, Twitter. Oh, I guess the SQQ. Oh, I see. The hedges. It's the hedges. So the hedges are killing us in this portfolio right now. Well, that's okay. I can accept that. And our butterfly portfolio, 188, that's rock steady, which is what it should be, because we bet both ways on that. And it was 188. It's actually, oh no, really? Oh my God, that's so funny. Wait. It was 287,880, and now it's 287,990. It has actually gained $100. That's the butterfly portfolio. For those of you guys who don't have a PSW, the butterfly portfolio is our most conservative portfolio. It's very, very carefully balanced, and it doesn't do anything. It's not supposed to do anything, except as you get closer to expirations, all the short puts and calls that we sell, so we sell in short term, right? So we sell monthlies or quarterlies generally. As they expire, you suddenly get these sort of bursts of money because they suddenly, they quickly lose their value towards the last the last week or so of their existence. They'll lose their value very quickly. But until then, you can be like it is now. We actually only moved $100 on this portfolio. It's completely market neutral. We don't care if it's bullish or bearish. It just makes money in any kind of market conditions. So all these things are fairly well balanced out, and within obviously the collection, we balance them out too. So that's hysterical, though. I mean, $100 variation in a couple of days is amazing, especially when the long-term portfolio went flying up. So basically, it's exactly what should be happening. I mean, the only bad thing is in the options opportunity portfolio, we might be a little bit too bearish because obviously we lost $3,000 on a nice market move up. So we certainly don't want to do that consecutively. And the solution to that is obviously to add some bullish positions to the options opportunity portfolio. All right. So if the market doesn't look like it's going to turn back down, that's our top priority. The LTP apparently is gangbusters. It's doing fantastically. We don't have to worry about the LTP. The OOP, we're getting killed on our hedges, so we either have to cut down our hedges, which I don't like doing, or we'll just have to add some more longs that we feel good about over the long haul. All right, so that actually, as I'm saying it, I'm pretty sure that's the way we're going to go. All right, let's wind this thing down. Oops, TLT do. Oh, good, no more questions. Fantastic. How's Apple doing? Come on, please announce something interesting. Please, please. Oh, the stupid earphone thing. That's right. I forgot about that. AirPods. Wireless. 900 million lightning collectors. Digital audio, blah, blah, blah. Batman. Oh, stereo. Oh, that's good. Oh, I really would like to have better sound. That makes me happy. Although my 6 has way better sound than my other one did. Stereo speakers getting ready, new headphone jack, EarPods. EarPods are the most popular headphone in the world. Yeah, because they're free. They come with a phone. They're moving to Lightning, da-da-da. Oh, this isn't wireless. This is just Lightning headphones. Big deal. It's the same headphones with a Lightning connector. And here's the adapter. Everybody's whining about, oh my God, my old headphones. Like, put in the adapter, you dope. All right. Wireless. Okay, so what about wireless? Notice taking wireless audio experience. AirPods. They believe in a wireless future. AirPods have a long shaft. They have oh, come on. Oh, look at that. Oh, that's freaky. I don't want that. Why would I want that? They detect when they're in your ear and only play when you're ready to listen. You can access Siri by tapping on them. Oh, so it's a microphone too? Oh, wow. That's kind of weird. So you don't have to have your phone out. You can just like, okay, I give up. I see the point of that. You do so essentially this is it. You walk around with this little doohickey and you have a phone and you can talk to it and it can talk to you and you can call people and tell Siri to do stuff and ask it questions. Ah, now we're getting into like Star Trek world, huh? All right, that's cool. Why can't they make one that goes on your shirt like a Star Trek thing then? I would like that. I don't really want one in my ear. I just want one on my shirt. All right, cool. AirPods are magical. And it connects to your watch, of course. Well, they're getting there. It's almost making sense, but wasn't the watch supposed to be the wireless connector to your iPhone? Wow. Wow, I can't believe that little teeny thing is also, it's got that, it's got a battery in there somewhere, and it's got a freaking microphone. Wow. 5 hours. Cool. That is cool. Where do you plug them in? So you should be able to plug them into the phone. Let the phone charge them up. Okay, he looks lame now. Why don't you have one of these? I still don't like that, but I don't want something sticking in my ear all the time. Wow, so cool. Okay, Apple Pay. This is a big thing, though. We're trying to bring around the world quickly as 10 new countries in the fall. You may know in Japan they use a different version of NFC. Okay, good. They finally have that up. Okay. Apple's chip team, new generation of chips. TrueCore performance. Wow, faster, really? I'm so happy with my 6. Wow! Look at that. Oh, man. What do I have? Do I have the 6S? I don't even know which one I have. Wow. Oh, that's sad. I was so thrilled. When I got my 6, whichever one I got, the difference between that and my 5 was unbelievable. So if I can get another boost of performance like that, I'm going to be real happy. Because I actually use my phone for work. I don't use it for fun very often. Oh, showing games. All right, forget it. Okay. All right, any other questions? Would you close out Kate once it's over 20? I don't think so. Isn't that a long-term position? What do we have on Kate? Kate. Okay. No, it's a 2018 play. Look, the net of this position, you always look, when we do the review, here's the top trade review, right? No, that's not it. Here's the review. Control F, Kate. There it is, Kate. On track for the full $5,000. Now net, this is as of the weekend. Now net $750, so it has $4,250 upside potential. So, wait. Kate, where'd it go? So in the portfolio, currently, where's my Kate positions? Okay, we have 6350 minus 30. So if I was going to close it out now, 6350 minus 3750 for that, and 1875 for that. Same thing, 725. So the net of this trade is $725. But if this trade, if it holds 20 into January 2018, it returns $5,000. Why would I close it? That's not how these things work, okay? These are targeted plays that take time to mature. I mean, frankly, for $725, if you want $5,000 back from $725, it's still a great brand new play. All right, initially, I see. Initially, we spent like zero, 5,500 minus. In fact, it was a credit minus 3,300 minus 2,300. So initially, we paid a credit of $100 from this. So the $725 is a great profit because we had a $100 credit. So now we're up $825 on the spread, which is actually great. All right, considering we bought it 2 weeks ago. But making $700 in 2 weeks on a trade that's going to make $5,000 in 16 months is only on track. That's what it's supposed to do. Okay, if this trade is on track, it's supposed to make those phenomenal returns. We have a lot of trades like that. You really got to go over in our review. You got to go very carefully. I make a very big point of this in the review, and it takes me hours. You would not believe how long this takes me to do. But I talk about this. I say, look, it's on track for the full. How much can it make? $14,000. How much is the net currently? $9,800. How much is the upside potential? $5,200. In this case, I said it's worth waiting for. Now, on what basis do I make that decision? I make that decision based on $5,200 is still 50% of $9,800. So I can still make 50% on the $9,800 I could take off the table. Do I have better ways to make money? Well, sure, I could put all this money into Kate. I could put $9,800 into Kate and get $50,000 back. But you know what? I'm not as sure about Kate as I am about this. Taser is one of my favorite stocks. I'm very, 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 very confident that I'll get my money on Taser. You can't make every trade a big gamble, okay? Well, Kate, things can happen along the way that'll screw it up. Taser, I'm super confident here. Here's Twitter, $3,600, $4,000 upside. Here's UNG, $3,300 credit, $13,000 upside. That's a good one. Still good, still a good trade. So look at that stuff carefully and look at the logic that we use for all of our trades. We talk about this in our reviews. Is it worth keeping? How is the trade position now, and is it worth keeping? Is the risk better than the reward? And as long as the risk is way better than the reward, it's worth it, okay? Once they start getting even, or once you say, wow, that seems kind of risky, get the hell out of the trade. You know, when I enter a trade for net $100 and it goes to $5,000, I really want to take it off the table at that point. But if it's a $15,000 potential, like whatever we were just talking about before, what was that one? Whatever I pointed to before, there was $100 and it's going to be $15,000. You know, when that's your upside, or it's going to be 5,000, whatever. But when your upside is going to be 50 times and you're only at 5 times or 10 times, then you still have plenty of upside. And then it's really a question, do you still believe in your upside? And if you still believe in your upside, why would you get out of the trade? We can't close every trade just because it makes money. We make money on most of our trades. You know, we're not up, we're not up 80, what is it? We're not up 85% in 1 year because our trades don't go well. They all go, they mostly go well. Most of our trades do very, very nicely. They make huge returns. Here, 105%, 67%, 18%, 13%, 38%, 57%, 75%. And keep in mind, the reason we have red is because we're betting against ourselves. These are hedges. In almost every position, we have a hedge. You can't win when you bet against yourself. Not everything. But generally, we do freaking well. Here, this one went 341% against us. But this one went 208% in our favor. But on the whole, the net is $25,000, and we started out with a net of $6,000. So we're up $19,000. Even though this 341% loss looks bad, it was purposely a loss. We planned on losing money there. You can't win on both sides. Only we bought the $15 calls, we sold the $23 calls. If these do well, then these are going to do well and go against us. But who cares? Well, I care about is what I net out of the trade. Am I netting a positive result? But you look at these winning numbers here, it's sensational money. And the negatives are almost all of them are just the hedges that are losing money. But that's how you build a portfolio that goes up 85% in a year. And again, it's all about the fundamentals, okay? We're not randomly picking stocks. We are not momentum traders. We are not technical traders. We pick stocks that have value. And because if we focus on the value and we pick good stocks, all we have to do is come up with a realistic option spread that leverages our position so that we know that when the value is attained, we will make a very high percentage turnover on our cash. And that's what it's all about. And the hedges keep us from, and the hedges, in case we're wrong, hopefully stop us from getting burned too badly. All right, that's a good place to stop it. Do read the reviews. Very, very important to read the reviews. And we'll pick up again on this next week when hopefully the markets are more exciting than they are now, because this is very sad at the moment. All right, thanks a lot for coming, everybody. I'll talk to you next week.